Saurabh Mukherjea has recently added two small cap stocks to his Little Champs portfolio. Now, if you're not familiar with the Little Champs portfolio, let me tell you that it is a portfolio of small cap stocks, and its goal is to find out relatively unknown companies which have the potential of entering the BSE 500 index in the next 3 to 5 years. The top 500 stocks listed on the Bombay Stock Exchange make up the BSE 500 index, while the total number of small caps is more than 5,000. So if an unknown company succeeds in entering the index, it could mean huge profits for investors. Retail investors always keep looking for stock tips and new stock ideas on YouTube, and mostly that ends up in losses. One of the easiest tricks to safely make money in the stock market is by cloning other successful investors. Mr. Monish Pabrai proudly calls himself a shameless cloner, and he's one of the best investors of all time. But the thing is, blindly cloning without understanding the business and the valuations could end up in huge losses for retail investors. Just knowing the name of a stock without understanding the business is very dangerous. So in today's stock discussion, we will be analyzing the two small caps, we will be understanding their businesses, their financials, and future prospects. Namaste and welcome to Retail Investing. Now, before we get into discussing the stocks, let's understand the philosophy behind the Little Champs portfolio. So the portfolio aims to find small cap companies with market cap of under $500 million, which is roughly 4,000 crore rupees. The corporate governance of these companies have to be excellent. The companies need to have superb capital allocation, a return on capital employed of minimum 15%. The companies need to have competitive advantages in the form of brands. The companies have to be the sector leaders. They need to have clean accounting and obviously very high potential for growth. Stock number 1 is SAR Sanitary Wear. So here is the chart. As you can see, the stock has surged more than 52% in the last 12 months. The current market price is closer to the 200-day moving average than it has been in a long time. The daily traded volumes are low, which means a lot of volatility can be expected. And volatility in good stocks gives the best buying opportunities. Now, before we get into the financials, let's have a look at the products and the company in general. So the company manufactures and sells sanitary wear, kitchen sinks, bath accessories, modular kitchens, mirrors, ceramic tiles, bathroom furniture, and faucets. Faucet is just a fancy name for taps. They have products in every range from affordable to luxury. Now, this strategy is usually not great for building a strong brand, but they have created sub-brands. For example, the Iswear range deals in the luxury segment, and they have hired international designers. And by the way, Kiara Advani features on the first page of the annual report. So here's the financial overview. The market cap is 11,079 crore rupees. So this company actually does not fit the $500 million criterion of the Little Champs portfolio. The current market price is 8,518 rupees. Its 52-week high is 9,782 rupees, and its 52-week low is 4,950 rupees. So as of now, the stock is trading quite close to its 52-week high. The average weekly traded volumes is very low, which means the stock can easily correct at any time. The price to earnings multiple is 46.6, which is much lower than the industry average of 56.9. The return on capital employed is 25.8%, and the return on equity is 19.6%. These are excellent numbers, and yes, the capital allocation is indeed superb. The asset turnover ratio is 1.17, which is really good. The debt to equity ratio is extremely low at 0.04. It seems like their manufacturing capabilities is one of their competitive advantages. Large scale and optimized manufacturing leads to economies of scale. This explains their impressive asset turnover ratio. They are the first Indian company from this segment to get certain ISO certifications on quality control and eco-friendly manufacturing. It's quite clear that this company's revenues are directly related to the real estate sector, and the real estate sector operates in cycles. The boom phase in the real estate cycle lasts for around 7 to 8 years, and we are already 4 years into the boom phase. Big real estate companies like DLF and Godrej have been launching a lot of new projects, and the bookings for new properties are at record highs. For these luxury residential projects, it takes roughly 2 years in between booking and delivering the project to the customer. So it can be expected that 2 years from now, the demand for bathware, sanitary ware, modular kitchen and faucets sales are likely to go up and the revenues for SAR Sanitary Wear should be high. And for this same reason, I feel bullish about Kajaria Ceramics as well. Now, one major risk that this company faces is changes in government policies. Stock number 2 is PDS Limited. So here is the chart, and as you can see, the stock price has doubled since September, and right now it is far away from the 200-day moving average. They call themselves a global fashion infrastructure company. The company acts like a link between retailers and brands from the West and small garment manufacturers from the Far East. They are present in the entire value chain of the fashion industry, from merchandise planning to raw material purchasing to manufacturing to logistics and all the way to retailing. So here is the financial overview of the company. The market cap is 8,134 crore rupees. Even this company does not qualify the $500 million criterion of the Little Champs portfolio. The current market price is 617 rupees, which is very close to the 52-week high. The price to earnings multiple is 37.3, which is very close to the industry average of 36.2. The return on capital employed is 23.4% and the return on equity is 24.7%. So yes, the capital allocation is indeed superb. The asset turnover ratio is 3.25, which is extremely high, and rarely we find companies with such high asset turnover ratios. The debt to equity ratio is 0.76, which is quite good. So here is the category-wise split of the company's revenues. The company earns 38% of its revenues from menswear, 34% from women's wear, 22% from children wear, and 4% from other segments. When it comes to revenue geographies, United Kingdom contributes the highest to the company's revenues at 42%. Europe contributes 32%. Asia and Middle East contribute 10%. North America contributes 12%. Australia 1%. And 3% from rest of the world. The company claims to have an asset-light model, and they aspire to double their business in the next 3 to 5 years. And to achieve that, they are expanding into high-margin business segments. The future plans are looking good. If we talk about risks, one big risk comes from currency fluctuations. Both the buying of raw materials and the selling of products happen in US dollars. This requires a lot of foreign exchange reserves, and foreign exchange reserves can deplete very fast depending on currency fluctuations. The stock price has doubled in the last 2 months, so it's better to wait for corrections. One thing that I find common in Saurabh Mukherjea stocks is that the risk levels are low, but the returns are not that impressive. Consistent compounding is good, but in small cap investing, we want multi-bagger returns. Now don't forget to type in the comment section what do you think of these two small cap stocks. And as always, this is a stock discussion video and not a recommendation of any kind. Education of retail investors is the top priority for this channel. If you learned anything valuable from this video, please like and share. And if you don't want to miss future videos, consider subscribing. Thank you very much for joining, and I'll see you in the next one. Jai Hind.